Well, tēnā koutou, kia ora everybody. I'm Sharon Fifield from the Queenstown Business Chamber of Commerce. Thank you so much for coming along today. We're going to start on time today and get through this. This is a really important one, obviously. Housing is a big issue for Queenstown Lakes. It has been for as long as anyone can remember, but now it seems just a little bit more pronounced and urgent. So with the support of Te Hoa Toka, the Southern Lakes Wellbeing Group, we've been able to put on this series. It's a three-part information series around housing, and particularly targeted for employers who many of them are looking at ways that they can house their staff to look after their staff and their business at the moment as well. So a three-part series. We've got some great guest speakers today. Kelvin Davidson, who is the Chief Economist from CoreLogic, so he's going to talk about the real estate market across New Zealand and also with particular context for Queenstown. And then Anita Vanstone, who is the Strategic Growth Manager for QLDC, talking about QLDC's homes strategy. So what we'll do, I should let you know that today, because we wanted as many businesses as possible to have access to this information, so today is being live streamed, so just be aware of that, so people will be watching online. What we will do is we'll hold all questions at the end, till the end, just so we can make sure that we can get through both speakers. So think of your burning questions as we go. So let's kick off. I'd like to welcome Kelvin. Thank you very much.
Thank you. Okay, was there a lighting issue or something? All right, yeah, well, thanks for coming along. Love talking about property, so very happy to do it whenever I get the chance. I don't have all the answers. I mean, I know there'll be a lot of questions. I don't have all the answers to what might be the solution here. I know it's a big issue. I was down here last week as well for a different presentation, and you get all your good intel from Uber drivers, and even in a random conversation with an Uber driver, it was like, man, the housing shortage. So I know it's a big issue. I've seen a few stories in the media the last couple of while. Like, has that been leaked out? But it's definitely an important issue. So I guess I'm about showing you some data, a few thoughts. Don't have the answers, but yeah, hopefully can answer some of your questions at least. Now I've only got 20 minutes, so I'd better not muck around. So a year or two halves, property market as a whole, I mean, there's definitely some challenges. We've still got high mortgage rates. There's still restrictions on credit. I think the mindset has shifted. For a while it was house prices always go up, they never go down. You're crazy if you think they do. Now it's almost the other way around, like the psychology is, well, yeah, actually house prices go down, whatever, we're accepting of it. So that's a factor as well. Now, hard to quantify, hard to know, hard to measure, hard to know when it shifts. It can shift pretty quick. But I think the mindset's pretty negative at the moment too. So definitely some challenges. But, things don't last forever, downturns don't last forever, and I think there's probably a reason to think of the case building. You can start to see some snippets of information about not necessarily a recovery, but at least the downturn ending later this year. All right, so I won't muck around on the agenda. It's pretty much nationally what's going on in the economy and property. Quick thoughts about where to next, and then the Queenstown context in terms of some data we've got and some things you might want to think about. So recent property performance, there'll be nothing new here. Property sales are definitely very low. Calendar year total for 2022 was like 64,000, I think, nationally, which is the lowest since 1983. So you're going back 40 years to find a quieter period for sales. So I guess, you can call it a standoff, I reckon. Buyers know, those ones who have got finance know that, they've got the power. They can put in cheeky offers. If it doesn't get accepted, well, I'll just go down the road and buy the next one. So there's no rush from the buyer side of things. Seller's not a much rush either, actually, because most people are in work. But yep, there's some strain on finances, but people are like, well, I'll just take my time. There's no need to rush here and sit on the market if I want to. So sales activity really low. When you see that, you tend to see values falling as well. So a couple of charts here. I mean, the one on the left is prices around the country in the main centres. Auckland and Wellington definitely kind of the weakest. Dunedin's down a bit. Christchurch much flatter. So that is sort of the economic theory playing out in reality, which doesn't happen all the time, but happens this time. So we always knew Christchurch was more affordable, so a degree of resilience there against house price falls, and we're kind of seeing that come through, as opposed to, say, Wellington, for example, which kind of went a bit crazy, and it's seeing falls. So yeah, it's pretty weak across the country. Queenstown is an outlier. Now, I don't reckon that's probably the best chart for Queenstown there, but you've got your average property values, annual and quarterly changes. So it's still kind of positive, or at least flat at worst. So Queenstown has actually held up. There was a period there after COVID where Queenstown fell, I think sort of 6-7%. But then rapidly bounced back and is now really an outlier in terms of national property market performance. You've got some random other bits of the country, New Plymouth, there might be some other small towns, Ashburton, Timaru, these parts have held up, but Queenstown's definitely, in terms of sort of the high profile markets, has definitely been an outlier lately. So value's still holding up pretty well from I guess an owner's perspective. That's not great if you're trying to buy. Always two sides to the story. But yep, so generally sales low, values falling still. What about who's buying? So keep in mind the market overall is pretty quiet, but we can look at we break it down every transaction from the buying side, classify these people into the different groups, first home buyers, investors, whatever. And so these are market shares within a quiet overall market. So keep in mind that purchases across all buyer groups pretty low, but when you look at it in percentage terms, you can, I guess, get a little bit of insight into which parts of the market are not quite as weak as others by buyer type. So probably, I won't kind of linger again, but I think on the left-hand chart, the national picture is really about the strength of first home buyers in those market share terms again. You're looking at 24-25% first home buyers. So, there's that non-financial thing there, the emotional side of things. I want to get on the ladder. So that's motivating first home buyers. Access to KiwiSaver. Using that low deposit speed limit at the banks, really getting in with low deposit finance, pretty much all of that is going to first home buyers. So yeah, they're still a pretty decent market share, even if the number of transactions is down, as opposed to mortgaged investors or mortgaged multiple property owners, which is that lighter purple line there, down at 20%. So still 1 in 5 deals going to a mortgaged investor, but 20%, if you look back through time, is really low for that group. So yeah, they're pretty quiet in relative terms. Again, not hard to find reasons. The list there's probably about 10 things. Certainly low yields at the moment. Interest deductibility is gone. 40% deposits, compliance. What else is there? You've got obviously high mortgage rates. The cash top-ups to keep these things sustained on a month-to-month basis, pretty big. I'm sure there's a couple of others in Brightline. Better returns on other assets. So there's a huge list of impediments. Now, we're not seeing investors selling really, or selling to any greater degree than they normally would, but certainly not buying as many. So hard to expand that portfolio and hard to start a new one basically. So that's the national picture. I should just point out cash MPOs doing pretty well, 15%. So it's sort of, yes, 15% is lower than other groups, but in some senses cash is king. If you're an investor out there with cash, not relying on the bank, you can sniff around, get some good deals. So their market share is actually pretty good in a historical context. Queenstown, again, different. Different in terms of prices, different in terms of market shares. So now I had to label those lines because the colours unfortunately are quite close together, and the numbers are quite close together. But you've got movers up the top there, kind of 27%. So that's your relocating owner occupiers. So this is, I suppose those people have been on the ladder a while, got a bit of wealth, can move around a bit more. That will include movers from outside Queenstown, so people who have sold a big house in Auckland and put their money to work here, retired or whatever. So those movers are pretty strong. But I think the big difference between Queenstown and elsewhere is look at the MPOs. So your cash investors and your mortgaged investors combine kind of 45% of the market. So it's really about investors, not about first home buyers. The red line there, kind of whatever that is, 13%. So yeah, tough for first home buyers. There'll be nothing new in here, but sort of putting numbers around it. So highlights the whole sort of housing shortage thing, homes being bought by investors, maybe sitting empty, put into Airbnb, these things which you see talked about a lot. it's definitely borne out in the numbers and pretty tricky for first home buyers. Not just because there's competition from other buyer groups, just look how high house prices are. Your deposit's got to be pretty significant. So pretty tricky out there for first home buyers. What about so we can also look at buyer classification by property type and lots of different breakdowns, but in this case age, so basically new or old, and actually this is kind of, I suppose in this case it's government policy playing out in reality, which they'll be pleased to see. Huge market share. These are for Queenstown new builds. Huge market share going to mortgaged MPOs, mortgaged investors. So again, no surprises, I guess. You can get interest deductibility, lower deposits on new builds, less maintenance, these types of things. So mortgaged MPO is pretty keen on Queenstown new builds. So I think this is, I suppose it hints at, I guess, a continuation of what needs to happen. Steering or encouraging new builds, steering investors towards that type of property, boost the housing stock, creates more property that could potentially be rented out to the younger workers. So yeah, definitely. Now keep in mind again, the number of purchases here, number of deals will be low. New builds are never a huge proportion of the market in any given year, but when you look at market share, still pretty active for those mortgaged investors. Okay, amongst all of this, credit conditions still a huge thing. Mortgage rates high, credit restricted. I think if I'm thinking about sort of two themes for the property market this year, I reckon this repricing wave is one of them, and the labour market. Those will be the two things, and they're kind of related. Those will be the two things I'll be keeping an eye on. So, what do I mean by the repricing wave? Well, it's this whole idea of people being fixed. 2 years ago, 1 year ago on 2% just after COVID. Now they might have repriced to 4%, let's say, but they've got another repricing coming up. So the left-hand chart's a breakdown of existing mortgages across the country by what terms they're on. 49.6 currently fixed and due to reprice within the next 12 months. So there's this steady flow of repricing. Now this isn't a crazy number. Go back a couple of years and it was 60-70%. So I suppose if we're thinking about a sort of repricing cliff or whatever you want to call it, we're actually through that. This process so far has kind of been ticking over. People have gone from 2 to 4, caused some strain to their budgets, but they're kind of managed. And actually 49.6% isn't that crazy. Go back through that chart, it's kind of normal. I think when you combine it though with the fact that they've gone to 4, fine, they've still got to go to 6.5 or 7, and that's what's kind of coming up this year. So the chart on the right's, now we don't know within that left-hand chart when they took out their loan, so there could be 5-year mortgages in there that were taken out 5 years ago or 2 years ago. But let's just say everyone's been on a series of rolling 1-year fixes. What sort of change are they looking at? So the right-hand chart's just that, how 1-year fixed rates have changed over the following 1 year. And no surprises here. I mean, lately, if you just look to the left of that dotted line, that's what people have been looking at lately. Change in their financing rates of 2.5-3%. So yes, they might have already repriced once, done it successfully, but they've got another repricing to come. So pretty still challenges out there. However, if people keep their jobs, we've seen obviously some job losses lately, but if employment can kind of have some degree of protection, then you get to the end of the year, and you see that purple line actually starts to tail off. So this repricing wave, people work their way through, get to the end of the year, and actually the change in interest rates that they're looking at is smaller or starts to tail off. So, not sort of sugarcoating it. There's definitely challenges here. We know that people's finances are under pressure. There's always, every month there's, Centrix putting out data saying that repayment problems are rising. So there's that's to be expected. But, just got to get through it. If we get to the second half of the year, most people will have repriced and, will hopefully be in a reasonable position. So, but this is definitely a big theme, and definitely the labour market's a big theme as well. So, what are these challenges? I'm already pushing up against time, but the labour market definitely a really key factor. Now, there'll probably be headlines coming, and we're already seeing them actually, about job losses. We'll probably see, I reckon, maybe unemployment become the number one issue, moving on from kind of mortgage rates, it kind of looks like now they've peaked. So actually headlines could become more about unemployment. However, I would just say, and not all forecasts agree on this, but if you look at somebody like the Reserve Bank and their labour market numbers, they've got the unemployment rate rising. At face value looks bad, but it's mostly about a bigger labour force. So people are coming into the labour force, new migration, they might have had a career break, whatever, raising kids, graduated, so they come into the labour force. But in the meantime, job creation slows down. They find it harder to get a job, and that pushes up the unemployment rate, as opposed to job cuts. So in their numbers, they're not really talking about mass job losses. There's always that going on, and we're seeing that at the moment. But I guess just if you see, shock horror headlines of unemployment rate spiking, just keep in mind it could be a bigger labour force. Now, not great, obviously, for those people who would like a job and can't get one, but at least people with jobs already, with a mortgage already, kind of have some degree of insulation. So I think that will help with that repricing wave. Now, a lot of uncertainty there. It hinges on the Reserve Bank being right. There's other people who are actually predicting job losses. So I might be cherry picking my stats a little bit, but yeah, just keep in mind there's lots of moving parts in those labour market numbers. And we start. I mean, if you want to sort of paint it more positively, look at the unemployment rate we're starting from, kind of super low. So yeah, there's obviously different ways you can cut the stats. And I suppose in terms of building a case for that more optimistic story for the housing market towards the end of the year, let's say mortgage rates are at the peak. People can now quantify their worst case. That's great. They can sort of move on from here. Get through this repricing wave. That sort of creates a more favourable environment second half of the year. Employment stays high. So you've got 2 or 3 factors there. Fourth thing, net migration really turned around sharply. Now, I'm sort of cautious of overplaying this because look what happened post-COVID. We had no migration, but house prices still spiked 40%. So I think, in the long run, yes, population matters, yes, housing stock matters, but actually in the short run, now, how do you define that? Don't know. But in the short run, credit conditions, I think, is still the big thing. So I wouldn't kind of overplay this net migration, but at the margins, adds people. They've got to live somewhere. I suspect, you tend to see new migration in net terms go into the main centres, probably into rented accommodation. So it could show up kind of in that, say rented properties in Auckland, for example, rather than kind of owner occupation in Queenstown. But, this is still net migration. And, of course, some of this will come into Queenstown through, visa arrivals and for hospitality and all that sort of stuff. So yeah, don't overplay it. Credit conditions still a really key factor, but net migration certainly adds population. So for me, look for the downturn to end late 2023. This is nationally, and I won't kind of linger on this. I kind of ran through those 3 or 4 factors. Part of it as well is that mindset thing that I talked about. There's just, it's hard to quantify, you never know, but you just get the sense that when people start to realise, okay, if mortgage rates are at their worst, not great, but at least I can live with that. I'm going to keep my job. Net migration's adding a bit of demand. Maybe I start to feel a bit more optimistic. So, and keep in mind, the recession's probably already here. People were anticipating it second half of the year. If that, now, again, you can look at it 2 ways, but if it's already here, maybe we get through it faster as well, and things can start to look a bit brighter. So, so that's kind of overall view. Definitely a lot of uncertainty, but these things don't last forever, and I wouldn't be surprised if things did start to pick up a bit second half of the year. And for me, what does that actually mean? Well, it means sales activity improving from a very low level, and probably house prices going flat, stopping falling, not necessarily rising again quickly, but certainly the fall's coming to an end. So very quickly, I suppose, on this whole question of what do you do about staff accommodation? Now, I don't have the answers. A very hot topic, as I say. I mean, if the Uber driver's talking about it, then, it's obviously an issue. I suppose just presenting some stats here. So, it's a pretty tough question. And I've listed a few things here. I mean, the bioclassification's showing that people are doing it. We've got 45% of transactions, whatever, going to either a mortgaged investor or a cash investor. So people are still making it pay. I suspect that external wealth, outside factors are playing a role in that. And of course, these properties could be used for Airbnb or holiday homes or whatever. When you look at the financial side of it, it's going to be pretty tricky. You look here on this right-hand chart, just gross rental yields, kind of really basic measure of I suppose, the relative merits of investing in property. Look at those gross rental yields for Queenstown, kind of whatever they are, 1.5%, 2% versus the national figure of 3.5%. Now, even the national figure is pretty low by past standards, but Queenstown's even lower. So, right at the start, the rental income relative to prices is pretty poor. Now, rents have been rising here. But prices are very high, so you've got to have that capital at the start to actually do it. And as I say, yields haven't really risen off the floor yet either. Like I talked about, all that. So that big list that I ran through earlier is relevant as well. There's, top-ups probably required and all that sort of thing. So there's definitely challenges. It's not an easy question. And buying a property to house staff is obviously a big capital outlay. Interest deductibility could come back. Might be one advantage. Now, National would have to win first, which, who knows? It's looking a bit shaky maybe. The election's a long way away, but so they'd have to win first and then actually follow through on their promise to reinstate deductibility. It wouldn't be the first time in politics that something hasn't happened. So, I wouldn't kind of bank on that either, but if you've got the capital, you can kind of make it work. Some people already are. Some people are making it work, so it's not impossible. But definitely a tricky question. So some parting thoughts, and this is a bit of a laundry list, and hopefully, if you take nothing else out of today, maybe take out that last table that we do actually have, some pretty detailed stats on some of this stuff that can help sort of maybe inform a financial decision around some of these things. Bottom line for me, it's kind of hard to see prices collapsing here. The Queenstown's a bit of an outlier in terms of property value, so it's not as if I'd be hanging out for a 10 or 20% decline in prices to kind of make the sums stack up. That doesn't seem particularly likely. So maybe there's no choice but to kind of keep dabbling in the rental market and sort of scramble around for properties and help people into rental accommodation. And of course, buying, there's no free lunch. Buying a property to house staff, great for your own business, obviously, but in aggregate, it just takes a property out of the rental pool and puts it into ownership. So it doesn't really change the sort of overall stock of accommodation necessarily. So there's a few other things I've listed down there. Saying before the talk, it's obviously a hot topic, but in some ways, you could view it positively as a success story. Well, geez, look how well we've done, and there's a growing pain thing here. The price of success, I guess, isn't always kind of free. So, look at it that way. But in simple terms, maybe it's just about. And I was chatting with Benji before about maybe there is a lot of new supply, and Queenstown is always held up as a part of the country where there is a lot of new housing supply. So it's probably not as simple as what I've got here, just saying build more houses. But there is this sense in which maybe it's the right type of property, a short-term accommodation facility that can house short-term workers, or that option we were talking about of just somehow bringing a few more properties into the rental sector. It might not take much, but just a few more would help to shift that balance. However, if you're looking at buying, some stats there on the property market here. I wonder if I'm an economist. I talk about averages, so keep that in mind. If you're buying a property or renting a property, it's an individual property. It has its own characteristics. It's not these averages. But when I look through this table, I go, Frankton, big market, lots of properties, reasonable yield. Well, by relative standards, from an investment perspective, 3.3%. Had some rental growth, and actually, say a lower court. So the median value, the median AVM there is quite high, 1.1 million. But what people are actually paying at perhaps a lower end of the market, that's that sort of fourth, fifth column, lower quartile price over the past 12 months, kind of less than 800 grand. So there's, still high, of course, but it seems like maybe that lower end of the market in Frankton is somewhere that's maybe a bit more achievable. So, like I say, don't have the answers, but at least that's hopefully a bit of a run through the market where it sits. There's definitely some challenges, obviously, in terms of where prices sit now, where rents are in relation to those prices. Generally, investors right across the country are finding it pretty tricky to get the sums to stack up. No different here. So it's definitely a challenge if people want to buy properties for those investment perspectives, but needs must, I guess. So that's it from me. There's definitely going to be plenty of time for questions. We've got a podcast if you want to listen to that, and we'll crack on to the council.
Well, kia ora, ko Anita Vanstone Takangawa, and I'm the Strategic Growth Manager for QLDC. So I'm part of a newly formed team. We had a workforce review and we created my team as a result of that. And in my portfolio, I also have housing, the strategic side of housing, but I also have my colleagues Marie Day, and her job is with community partnerships and the social service providers. And I also have Katie Russell, and she's in the planning side of housing. So even though I own the portfolio, it is split across council. So I'm going to do a cheeky plug. We're about to go out to recruit a housing officer, so a dedicated person who their whole job will be dedicated to housing. So if anyone is passionate about housing or knows of anyone that would be interested, get in touch. So we'll be advertising in the next couple of weeks. So what my session today is regarding our Joint Housing Action Plan. So I'm going to go over why we're moving forward with the Joint Housing Action Plan and how that interacts with our home strategy. And essentially it's a joint vision to create a cohesive approach towards housing in our district. So what I'm going to do today is just provide a brief overview of what we're doing in the housing space, and also provide a background and update on the Joint Housing Action Plan. So none of these stats will be a surprise to anyone. We're one of the most expensive places in New Zealand to buy and rent. We have demand to double our existing housing stock over the next 30 years. 20% of our housing stock is unoccupied, and a high portion of those, we have a high portion of short-term to long-term rentals. Our building costs are 36% higher than the national average, and our housing issues have flow-on effects in terms of recruitment, staff retention and wellbeing. And even you'll see with our pool closures, QLDC is also feeling this struggle too. And what we all know is this is a complex problem, and council can't solve this alone. This is something where we all need to work together. So what we know, so as I said before, we need demand is showing we will need another 17,000 homes over the next 30 years. Now this isn't a target, we're not targeting 17,000 homes, this is just what we're looking at, how we've grown, what the stats are showing us. We have enough zone land and planned zoning to accommodate that growth. The market is not delivering affordable housing, and there is a shortfall of affordable housing of around 7,000 homes over the next 30 years. And worker accommodation is in critical demand. So back in 2018, the Crown approached us and we formed a partnership with ourselves, Kaitahu and the Crown, and to really target the challenges across our district. We're in a really lucky position to have the opportunity to have a partnership. The other partnerships of the time were Auckland, Hamilton, Tauranga, Wellington and now Christchurch. So we're actually one of the only small towns who has a strong partnership with government. And essentially this partnership was formed to align decision making and investment across our district, and also looking at carbon reduction, improving resilience, and just really have a commitment to work together and get on the same page. So when we released the Joint Spatial Plan, which was adopted in 2021, we had 22 actions, and of those actions, 6 were prioritised, and one of those actions was a Joint Housing Action Plan. So what is QLDC doing now? We work closely with Julie and the Trust. We've helped 244 households via the Trust from 2007. We've provided land and money, the council, and I think Julie said that equates to about 30% of capital funding. We also have helped facilitate land and money from stakeholder deeds. So all up, QLD's contributions and contributions we've received from developers via stakeholder deeds equates to about 85% of the Trust capital funding. So for a long time, our focus has been on that affordable housing niche, and that's the remit our council has given us. Since then, we've had a new council, and our remit has been extended to look at the rental market too. So plan changes on the go. We have an inclusionary housing zone change, and so essentially that's a financial contribution for new builds which the money or land will go to the trust. And if you want more detail on that, Katie can provide that. We also have recently the Tiputahi Ladies Mile was accepted as a streamlined planning process, and this is a new process to sort of cut through red tape and quicken up the plan change process. So a decision will be released sort of early to mid next year, and essentially there's no appeals. So often what we find in Queenstown Lakes is we'll be fighting decisions through the courts, not only the High Court, but also the Court of Appeal, sometimes back to the Environment Court, back to the High Court. One of mine did a full round, so we're often in the courts fighting a lot of our decisions. So this streamlined planning process will cut through a lot of red tape and will give certainty on the decision. We're also looking at changes to our residential zones as part of the National Policy Statement, and that's a requirement from government to look at our zoning and to relax some of the standards so that we can get increased densities in some places. So we'll be going out soon, probably in the next couple of months with that. So that will follow a normal plan change process. So another point here, things that we've done as a council that has been different to other councils, when we had the HASHA legislation, which was a temporary piece of legislation put through by government, we were the only council to secure land via sort of like an inclusionary zoning. So as part of that, we got land and money for the trust, and we were the only council throughout New Zealand who did that. So we have been pushing the boundaries quite a bit with new legislation coming through. We're also doing a lot of advocacy and collaboration, advocacy around affordable housing, short-term letting, accommodation supplement and alternative funding tools. We're working with the trust, with the chambers on a toolkit, and we're developing a joint housing action plan. We're also going out to recruit a dedicated housing officer. So a lot is happening in that space. So what is the Joint Housing Action Plan? It's a joint vision between ourselves, Kāinga Ora, Ministry of Housing and Urban Development and the Trust, and it's to form a cohesive approach together on how we deal with this issue. So the draft outcomes are affordable housing options for our community are increased, a range of housing choice exists for everyone, homes in the district are healthy, warm, secure and sustainable, and stronger partnerships that accelerate delivery. So the focus is that this will, the intention is this will supersede our home strategy, but actually they may sit in tandem. It just depends the feedback we receive from the community and our councillors. And people may say, why do we need a joint housing action plan if we have a home strategy? And it's really, the focus of this is that partnership approach, getting all the key players on the same page. So what we really are focusing on, getting a clear evidence base with regular monitoring. What we're seeing from our government partners, if you look at the public housing investment, we're seeing no public housing investment across our district, but we're hearing stories that is a need. So we need to work with our social service providers and make sure we're getting that evidence story back up to government. We want increased provision of affordable housing through tools such as inclusionary zoning, through different plan changes if possible. We're looking at legislation and other tools. We want to continue to support the trust, attempt to influence and incentivise the development of affordable housing where we can, and looking at solutions to the rental shortage and also planning solutions. So currently the draft Joint Housing Action Plan is with our councillors for consideration, and we're hoping to go out for public consultation in May, June. So where is the home strategy? Just answering some of the questions, it's on our website. So it was adopted in late 21 and it's publicly available. How can I get involved in the Joint Housing Action Plan? It would be great if we could get some input and use this group into the Joint Housing Action Plan, and there's an opportunity to review and comment. And I think through Sharon it would be great to do some targeted sessions. What our focus is on is having that really clear evidence base and commitment from government so that we're all getting, we can get increased levels of investment in housing across our district. Cool. I think so.
Thank you. So question time. Oh, do you want to come and sit up here, Kelvin and Anita? I'm sure there's loads of questions. I've got a question to kick us off, actually, for Anita. So you spoke about, and I met with someone from Kāinga Ora last week, actually.
Oh, yes.
And he spoke about how government, there's not a lot of evidence of the need locally. What can, when we hear media reports of people living in tents and cars, etc., what can employers help with in terms of demonstrating that need? Is this registering with MSD or?
Yes, I think that would be great, and I think that's Marie and I's next step is to formulate a process for that, because what we want to hear is the people that can register for MSD, but also making sure that people are registering who are able to on Julie's list too. The more evidence we show that there is a need, the clearer it is for us. So the first action of the Joint Housing Action Plan is to get our story really clear and straight. And then what I'm envisaging is a 2-pager, so that every time we talk to government or anyone, this is our story, this is where we need, this is where you can help us with our community. We're also hoping to, through the process, get some investment in affordable housing through one of the government's programs. So that's also a key focus.
Cool. Ooh, great hands. Benji, I think you were first.
It was actually just a wee follow-up on Sharon's. So let's say people that can't go for support through MSD or aren't in a position to sign up with Julie at the Trust, those temporary sort of workers coming through, how do you think government would like us to demonstrate maybe those shortages for transient and temporary workers that are such an important part of our labour force?
Yeah, and that's probably something that Marie and I are going to be looking at, but I think we'll need to have a list of those people and potentially encourage those people who to collect that data for us too, because that's the problem is with your visas you're not able to access MSD funding, and that's what we saw after COVID, and that was a massive issue, and that's why QLDC had to step up in that recovery space. So yeah, I think that's something we need to work through with the key providers and have a place or a platform to be able to register.
David?
That's a statistic that the Chamber could follow up on to support that is to canvass the members how many staff they're losing.
Yeah.
We've already lost at least 5 new hires this year alone because they've joined us living in hostel and just can't find anywhere, so they're moving on. This is enormously expensive and frustrating, so if you collect those stats, then that would be a big support to backing that up.
We are open to any ideas on how we can collect that data, because what we're hearing loud and clear from our partners is we need that clear evidence base. What we say is we've got people sleeping in cars, we've got a need for public housing, and the Trust are providing that shortfall, but what we're not seeing it on the list, we're not seeing it, people are registering, so it's that combination of just getting that evidence really strong, so then we have a good case.
Tracy?
I think it's because the majority of the people that we're talking about aren't New Zealand citizens, so they can't register anywhere. MSD won't allow anybody to register at the moment either because they have no affordable or emergency housing, so they're discouraging people.
So does the Citizens Advice Bureau, could you play a role there?
We're running a poll at the moment, and it'll be picked up by the Lakes Weekly as well. Looking at what we've got back, and it's only about 100, so it's a really different kind of look. About 80% of those people are saying they will be leaving town if they can't find long-term accommodation, and that is the biggest problem. That term is going to be huge.
Well, I think through Marie it'd be great to touch base and see how we can work together to gain that data.
Totally.
David?
On the Joint Housing Action Plan, do you have a single priority above all others? Looking at the statistics you put up, the Affordable Housing Trust, great work, but it's accounted for about 12 houses best a year, which really wouldn't make any dent in the requirement. So if you refocused your attention just on the rental and moved away from that rather ineffective actual affordable housing.
fortunately, a remit from our council has been to concentrate on that affordable housing area, and so that's something that we've still been told is our focus, but it has been extended to include the rental market, so it will be a focus. But for instance, in terms of the joint housing plan action, what actions take priority, that will be up for our councillors and the feedback we receive back from our community. But I know that for me, the first one will be that getting that clear evidence, and then everything will flow on from that. Marie is currently working on some how do we explain it, Marie?
Probably not. Yeah, we're just looking at what kind of messaging or campaigns we can kind of encourage our community to think about in regards to rental accommodation. I'll be giving some chats to Sharon in the chamber about that. So we should be able to tell you a bit more about that in the next couple of weeks.
But what we're hearing from our mayor and councillors is staff accommodation is also very important and is a priority, as well as affordable housing.
What does an affordable house cost?
Yeah, good question. Yeah, good question.
Well, it's I think it's, and now we say 35% of your gross income. That's correct, Julie and Katie? Yes, but also when we're looking at affordable, when we look at our housing needs assessment, it's anything below 800,000. And I mean, in my mind, 800,000 is not affordable, but that's why we say affordable. But it's that sub 800,000 is what's being targeted. But see, what the trust can offer is housing that's way below that, and that security. So.
Have you got developers on people there?
No. I mean, when we look at our housing, well, we do have some developers who are really they work really closely with the trust, and through our special housing areas, which is that HASHA legislation, we were able to get anywhere between 5 to 12.5% contributions to the trust, but that legislation now doesn't exist. So that is why we're pushing through that inclusionary zoning, inclusionary housing, so then we can get that reliable supply to the trust. And yes, they're only delivering, we've got 244 households, but that is over 750 people. That's still a lot of people that now have secure homes. Queenstown Lakes donated land just out by Jock Street, and that will enable the development of 68 homes. And that's game-changing for that community, where we're seeing prices escalate, we're seeing people move out, the school roll dropping, so it's lots of broader effects than just housing.
Just on the end of that, I'm really sorry, this microphone's embarrassing. My family and myself actually bought in Lake Hayes through you guys, and we wanted to say thank you. We would have left town if we didn't have that home. We've got 2 small children, one goes to Remarkables Primary and the other is in daycare, and the reality is that we would have left town had we not have got that, so thank you very much. That's all I really wanted to say. It's an awesome scheme. Not many people know about it is all. I think a lot of people that have moved down from Auckland, we've got staff, I work at the Sedema Hotel, I'm telling as many people as I can to get on that list, because if you're not on it, you can't be in it. So I know you advertise all the time, but a wider target would be really awesome. So that's all.
Good suggestion. Over here?
Same as the ladies beforehand, I also bought my first house through the Housing Trust, and I'm really grateful for it. It's amazing. The thing is, though, quite a lot of the houses that are building, and this might have changed recently, they're quite large for a first home, for an affordable home. So, for example, my house was a 3-bedroom, 2-bathroom, 3-toileted, with a double garage and a fenced-in section. And so that's quite large for an affordable house. So for me as a first home, that was really almost too big, but it was what I could afford. So if there's smaller, maybe 2-bedroom houses that are being part of the scheme or that are being built around town, that's all people need for a first home. First homes are supposed to be stepping stones.
Julie's going to answer that. Thanks, Julie.
I feel like I've got so many people to answer. Yes, so just to go back to that very first point about 244 homes over 15 years, we started in 2007 and we spent the first probably 12 to 15 years building capacity, and now we're at the stage where we're actually scaling up. So under construction right at the moment, we've got 100 homes across 3 different developments in Hawea, Northlake and Arrowtown. I can look at our waiting list of 870 households, and half of those would only need a 1 or 2 bed unit. So 100% agree we don't need to be building just big homes anymore, and that's why we purchased 50 of the Toru apartments, which are just over there. We sold 8 and we kept 42, and they're all very small, and they're satisfying that different cohort of people that we need. So yeah, thank you for all your support, everyone.
Thanks,
Any
Julie.
more questions? I'm happy to take them.
Good to know you're here.
Julie and I spend our weeks scheming on how we can get more money and land for the trust, so it's a big priority.
Just
Rebecca.
following on from the smaller properties, there seems to be a huge demand for tiny homes and places for people to put tiny homes, so people are being able to build them either for themselves or to rent out, but then there's nowhere to put them. This is here, Wanaka, there seems to be a big demand for that. Is there some kind of project to go into play to have space for them to put these? Because that could create a community feel as well if it's done correctly.
There is no immediate plans to do that, but that everything has been put on the table, so it's been investigated, but there's nothing, no immediate to do something like that yet.
Good to hear that it's on the table, because I think that's an idea that keeps coming up as a quick solution, perhaps, with some land. Sorry, John.
Hi, thanks for the presentation, it's really helpful. I was at the protest last week, it was interesting, and it's, thank you, dead right that there were about, 80 people there at one point, and I'd say 98% of them didn't have New Zealand accents, that's for sure. But many of them come from countries where they don't necessarily trust authority. So, including from the UK actually, but other places too. And so I think, yeah, there needs to be a real effort to connect with them. Now, the Mayor mentioned, I think in one of his media things last week, that there's an emergency operations centre being activated. So, could someone describe what's happening in that case, if it is? But within that, I do disaster management, so intelligence is critical. So that group that's been established will be, because they've got members and they've got people there talking, they'll have really good data, so hopefully that's part of what's happening. But the questions and some of the points made here by business owners and operators is a really good intelligence source. And it all needs, some of it will be duplicate, that's okay. But I think together we have a really good picture of not only where we're at, but looking at the economic stuff that was mentioned, where are we going together and how can we draw a picture not only of what it's going to look like, but what we want it to look like, and it's got to be different from what we're doing now. And affordable homes for long-term living are only a small part of it.
In terms of the emergency management, I'm not part of that. But there is a group of myself, Marie, that have all got together to, sort of more like a think tank. So that's where we stand with that. I think that's probably what I'm aware of. I agree. We need to work more closely together, and I think this the priority from the Joint Housing Action Plan, that's our first priority, is to gather that data and to pull that story. And I also agree, what I have to be honest, what does keep me up at night is I think, my children won't be able to live here. There's no way, unless we do something, our children won't be able to afford to buy a $3 million house when they come out of university. It's just, so it is. It's an issue that we are taking very seriously, and we fought really hard to get a dedicated housing officer as part of this workforce review. And thankfully it came through. So you'll be seeing a lot more in this space. Also, what we're hearing loud and clear is we are actually doing things and we are actually achieving, but we're not good at telling our story. So that's another big part of that housing officers getting it out there, saying, look, this is what we're achieving. We're on the cusp of doing some really great things, and I think we need to get better at communicating. And so that's another thing we've heard loud and clear. Actually, you are doing stuff in this space, but we don't know. So it feels like you're not doing anything, but we're dedicating a lot of our time in that housing space.
Yes, another question.
This you may not be able to answer, I'm sure you might. What do we do right now?
Yeah.
Speakers coming from overseas,
And
where am I going to put them for winter? I don't have enough cars.
Yeah, great point. And actually, I've been meaning to read a question that's come from the live stream, which basically backs up your question as well, which is, much of the discussion is medium to long-term solutions. We've got people sleeping in cars. How do we support our workers in the short term where we cannot find affordable or even suitable rentals? And the fact that many landlords expect or seem to prefer families over workers. So that is a big issue. What can we do now? The days are getting colder.
Well, I think we're working on a couple of things, and hopefully we'll be able to release something over the next 2 weeks, but there's no silver bullet. This is, in my space, I'm concentrating on the medium to long-term solutions, but working with Marie's team on the short-term solutions. But I think what we really need to do is get together. I think everyone who plays a role needs to take ownership in this, and we need to drive it. I mean, I know that I have a residential flat that I rent out way below market rate because I feel a responsibility to, I want this lovely lady to be able to live here and work in our community, so I think lots of people who can, but that's the other problem, is it's so, with Airbnb, a lot of people can only afford to live here because they can rent out their residential flat on Airbnb, so there's all these interrelating factors that make it a very complicated space. But we'll be coming out to you with some things over the next couple of weeks.
Thanks, Anita. Any more questions? Kelvin, it seems like you're pretty off the hook here. Your presentation was so thorough.
Is there a plan to have legislation around the Airbnb? Is there any changes?
We did attempt to make changes in our proposed district plan through the Resource Management Act. But making changes through the Resource Management Act is very challenging. We were the first council to actually control visitor accommodation via our district plan. So we put in for stricter regulations, but we weren't successful in the environment what we mediated. But the problem is, to actually be able to monitor stricter conditions, you'd need someone basically on the street, outside. It's a really challenging space. We don't have the Airbnb book a batch data, so without that, it's hard for us then to monitor. So we did attempt, but we've been advocating to government to say, and through our submissions on the reforms, we said, give us a piece of legislation where we can control this. Give us some legislation where we can mandate affordable housing. I worked in the UK for a developer, and when we were developing 600 houses, 300 were for affordable, just like that, because national legislation required us to do that. As a developer, though, we did make money from those affordable housing packages, so we'd make money and then we'd sell it to someone like Julie. So it's quite a different, but there are a lot of things we're advocating, that affordable housing, give us something that we can control that, but also looking at the things such as the healthy home legislation that has made it difficult for people to rent out their homes, so it's now easy to put it on Airbnb. Looking at those playing fields and seeing what we can do in that space too.
Yeah, I think that legislation plays a big part, and what's really frustrating is the 27% of unoccupied homes at the moment, which was from 2018 census, right? So, it could be even higher now. So how do we, we've got property sitting there, how can we encourage landlords to actually rent it out long term? And there seems to be a few disincentives to that at the moment.
Tenancy laws are really fine.
I know.
Yeah.
I know. Yeah.
You can see, we understand why those were put in place, but they've flipped to the other side now, where it's actually difficult to rent it. There needs to be a balance. So a big part of that data is getting that evidence and saying, look, this is what it's done. This is why we're seeing a drop. I think Benji or someone released something showing that we had 100 of Benji's. There are 100 less rental properties in the market this year. That's massive. That's potentially over 300, 400 people that would otherwise be in rooms. So it's
Okay. Oh, another question.
One more. What about the Nomads building that's sitting there empty?
Yeah, we've been we've been asking questions about all those. Yeah, and also, there's a couple of other backpackers that are vacant too. So we've been asking questions about that. So, but have not heard anything back.
This is more sort of a medium to long-term question, but there have been a lot of developers who've talked about getting purpose-built worker accommodation in the district. Why has that not happened, and how can that be enabled?
I think there's been a couple of examples of worker accommodation brought in, and our discussions with them is, yes, they were successful in housing the workers, but there were a lot of other issues outside of that. What happened after work, it became quite a big party, you know, so, and it wasn't also in discussions with other councils in Australia, that when they looked at it, it wasn't actually feasible, I think economically feasible, but that's something that we are looking at. It's, as we've been told by our bosses, that we're looking at everything as being placed back on the table, and we're looking at everything. But yes, I can definitely see, you know, that we're in Kaikoura, that something similar to that, but there are a lot of issues wrapped around services, social requirements, land that we need to work through. That's not an easy, quick fix.
Okay, any more questions? We are, oh, yeah.
Yeah, I was just going to say, it's the base building, not the Nomad building.
Oh.
I do know that the South Island manager of the new company that owns it could be really, tell you it's gutted, so it's no good.
Yeah, no, it looks gutted.
We're going to turn it into a five-star, but they've abandoned that.
Okay.
I'm gutting it, so it's no good. There's no bathrooms or anything in there.
Yeah, because we walked past the other day and we're like, oh, they could house so many, you know, workers.
Yeah.
Absolutely, but it's
Yeah, and that's the thing, is a lot of those buildings are owned privately, so it's, even though we can, you know, make inquiries, it's sort of up to the private owner what they do with it. So.
Okay, so we've got people online, so we probably do need to wrap it up. Thank you so much, Kelvin and Anita, for coming along today. Thank you to you all for giving up an hour out of your morning to come along and learn more as well. Mentioned earlier that this is a 3-part series, so we have the next session, same time, same place, on the 18th of April. And we're going to have my HR along to talk about if you're, you know, housing workers, the implication around employment contracts, and also Five Peaks Accounting, who will talk through some of the tax implications and questions. So that's the second one, and then the final one is on the 5th of May, remembering, and that we'll have the Queenstown Lakes Community Housing Trust and also House Smart coming along to talk as well. So thank you, and we're also going to pull together some FAQs in the form of a toolkit, which we'll make available at the end of the series as well. Thank you very much for coming along, and have a good day. Oh, sorry, one more thing.
Quick question, can we get access to their live stream? Will that be published on?
Yes, yeah, so we'll publish it on our website.